Welcome to our Taking Stock video for the week ending the 17th of May, 2024. I'm Kien Trinh, Head of Research at Stock Doctor, and today I'm joined by our Equities Analyst, Daniel Ortisi, to stream to you all things share market. How are you, Dan? Great to have you on board, and how's your week been?
Yeah, good to be here again, Ken. It has been a busy week. We've had the budget, we've had news on inflation in the US, and we've had a star stock result out of Aristocrat. So lots to go through, and we'll touch all on those today.
Yeah, definitely, Dan. But before we just get started, just a quick yet important reminder, the information we provide today is of a generic nature and therefore shouldn't be taken as personal advice. Remember, shares are volatile, so only past performance figures shouldn't be relied upon as a guide for future performance. Well, Dan, it's been another solid week for equity markets. The US market broke through to record highs, and that was due to April inflation data coming in less than expected, taking the core inflation rate down from 3.8% to 3.6% for the year. Now, financial markets are now pricing in a 52% chance of a 25 basis point cut in September. That's in the US. And in Australia, though, we had weak retail sales and also slowing wage growth and rising unemployment. And that's reducing the probability that the RBA will hike rates this year to tame inflation. But again, Dan, we cannot be too complacent. We're not seeing much earnings upgrades to support the market rally. And the budget released this week, as you mentioned, could mean that major government spending could keep inflation higher for longer.
They're the spot on, Kian. And one thing we always discuss is that you don't have rate cuts in a positive economic market, and eventually our concern is that the market will begin to price bad news as bad news and not bad news as good news. But switching our focus now, and let's talk about obviously during the week the budget release, and Treasury Jim Chalmers focused really on perhaps what one would call an election-based budget, certainly helping households deal with cost of living pressures, and notably they're providing consumers with electricity and rent subsidies in particular. So there are concerns, however, from the market that these measures will only be artificially bring down inflation in the short term, of course, through those subsidies, but in the longer term, these kind of expansionary natures of budget spending, coupled with further tax cuts in coming financial year, is almost certain to put pressure on inflation and potentially keep interest rates higher for longer, Ken.
Yeah, we'll certainly keep an eye on those statistics over the next couple of months. But let's talk more about the budget later in this episode, Dan. And now let's turn our attention to a few star stock highlights for the week. First off, I noticed English language testing business and borderline star growth stock, IDP Education. They had a share price bounce following the release of the budget this week, and the stock has been sold down over the year due to heightened risks around the proposed student immigration cuts across those English language countries. Is there anything here investors should be aware of?
Yeah, well, IDP Education, Ken, is currently amongst one of the most shorted stocks on the ASX, as we've discussed in the past. The short interest has risen to over 16%. So, of course, there does appear to be some aspect of a short covering this week off the back of the budget release, meaning the stock is obviously bought back by those who are short the stock in a short amount of time, therefore resulting in that big share price bounce on the day. So the budget had confirmed that the government will introduce legislation to cap international student enrolments, although the positive news is that there will be consultation before the cap is introduced from the 1st of January next year. And also there was an expectation that student visa application fees would increase from around $700 to $1,500, but this was not mentioned during the budget presentation, Ken.
Wow, Dan, definitely a case of no news is good news. And something that I also noticed as well was that could have impacted IDP came from the Migration Advisory Committee in the UK. They did recommend retaining the UK graduate route in its current form, meaning there's no need to tighten visa requirements yet. And that's to avoid the risk of an overcorrection in this market. This, of course, is positive for IDP Education, but I noticed, Dan, that the stock surprisingly has not experienced large negative earnings revisions despite the risks.
Yeah, very good observation there, Ken. It's
Mm,
why we're still happy to retain it as a borderline star stock at this point in time. And
mm.
speaking about earnings resilience, let's turn to GUD, which had a trading update last week, a very timely update. We spoke about it on Lincoln Live. So, what did the trading update tell us? Well, it was in line with expectations, although there has a small, roughly $3 million downward in revisions for FY24 operating earnings guidance within its Auto Pacific Group segment, of course, the business it acquired a couple of years ago. And this segment now represents around a quarter of the company's total profits.
Yeah, not too large there, Dan. But despite this, our analyst Charlie, he does believe the gross dividend yield at around 5.3% remains sustainable with a clear earnings runaway ahead, given the backlog of demand for cars in the short to medium term here.
And watchful stock doctor users would note that the decline in free cash flow for FY24 relative to FY23. Now, this is simply because FY23 saw a significant boost in its free cash flow due to the unwinding of working capital. So, meaning GUD did have an elevated level of inventory, and instead of refilling that inventory, it sold it down, therefore leading to a significant cash inflow to the business. Free cash flow per share, however, remains materially higher than dividends, so we don't think it is a material risk to its income.
Yeah, so if you have any questions on that, feel free to contact our team. Also, within the auto segment, Dan, we reinitiated coverage of specialized manufacturing company PWR Holdings as a star growth stock this week, Dan. And for those who are unfamiliar with the company, PWH, they design and manufacture cooling systems for high performance vehicles such as NASCAR and Formula One. And one of its main competitive advantages lies in its vertically integrated business model, which allows the companies to monitor the entire engineering process in-house from the design stage to prototyping and finally to manufacturing as well. And this enables the business to deliver a quick turnaround and offer a high degree of customization for its customers. This is why the business can generate net profit margins of 18% and a return on equity of 29%. So great numbers there, Dan.
Yeah, very good overview, Kian. And maybe just touch on the investment thesis a bit. So the thesis for the company lies in the belief that they can branch out further from its traditional motorsport racing routes and continue to pivot towards those lucrative aerospace and defence sectors. For example, the Australian Defence Force is currently testing electric vehicle takeoff and landing aircrafts, also known as VTOL aircrafts, which, if given the green light, could seriously see PWH design bespoke cooling systems for these types of crafts.
Yeah, some very strong thematics for that company, Dan. And we have provided a comprehensive initiation report and suggest members have a thorough read of this and be comfortable with the risk before considering investment. Now, looking at the week ahead, nothing really is set in concrete, although we've got accounting software business Xero. They are expected to report soon. In the meantime, we'll also be closely anticipating the results from SaaS software business Technology One, which could potentially be returned as a star stock in the near future. This week, in Under the Microscope, we take a closer look at casino and online gaming company Aristocrat Leisure. The company did announce impressive results with profits significantly ahead of consensus expectations, and that led to a share price rally of around 12% on the day. So Dan, can you walk us through some of the highlights here?
Sure thing, Kian. The first thing was obviously total revenue was actually ahead of consensus expectations by around 1%. Now, that was driven by a strong US gaming sales result, especially with the launch of the new NFL themed slot machines that resonated with players. But the real winner, however, was a significant improvement in earnings from the company's digital gaming division, Pixel United. Although this division reported flat revenue, its segment earnings grew by around 17%, and that was thanks to management's tight cost controls and reduced user acquisition spend.
Yeah, Pixel United, they represent around 42% of the total revenue. So no wonder it kind of drove the earnings surprise there. But management also surprised the market by announcing a 350 million extension to their on-market share buyback program. And with so much cash on the balance sheet, Dan, what are your thoughts on the management's intentions regarding capital management?
Yeah, it was certainly something we were discussing prior to the result, Ken, given that
Mm,
they do have a significant, $350 million of net cash on the balance sheet. So Aristocrat remains in a very strong financial position, and that's extremely important to us. We don't like to see capital initiatives without a very strong balance sheet.
mm.
To date, management has returned approximately 1.4 billion to shareholders through a combined on-market share buyback and also through dividends. And the current plan to return a further 300 to 500 million dollar buyback all the way to February 25. And that, of course, certainly resulted in positive share price sentiment during the week.
Yeah, talking about share price sentiment, Dan, no doubt management saw value at the previous share price of around $40, considering the recent decline from its all-time highs of around 47. But speaking about that share price decline, Dan, do you know what may have contributed to the negative sentiment leading into this result?
Yeah, I think there could have been a few reasons, Kian, for the share price weakness, and perhaps one could argue that the lawsuit with current competitor Light and Wonder may have been playing on investors' minds, preferring to be cautious ahead of the result, fearing potential leaks of trade secrets to a competitor. And judging by the significant share price reaction following the release of their update, it seems the market might have been just preferring to sit on the sidelines, anticipating perhaps a weaker than expected result. However, of course, management was able to deliver quite a solid result, and hence the market's reaction of the day was quite strong, like you've mentioned, Kian.
Yeah, fair enough, Dan. With that said, though, the share price is now trading close to fair value. However, we do believe consensus forecasts and price targets will be revised higher in coming days just to factor in that better than expected performance in the first half. And back to the budget. With that being released this week, Dan, a few of our members are wondering if there are any impacts from the budget to our star stocks.
Yeah, a good question, Ken, and one that we always like to revisit at this time of the year. So,
Mm,
overall, the core of the budget was, as we discussed, seemed to be to provide cost of living subsidies, including energy bill relief and rental assistance. In addition, the upcoming Stage 3 tax cuts should ultimately benefit consumer-driven businesses such as our star income stocks, Coles, Woolworths, Star Growth Stock Endeavour Group, Borderline Star Growth Stock Treasury Wines, and perhaps even Wesfarmers' retail division, which comprises of Kmart and Target. Beyond the staple sectors, there could be a minor flow-on effect to our discretionary retail stocks, such as Borderline Star Growth Stock Breville and Star Growth Stock Super Retail Group.
yeah, now some good points there, Dan. And on the healthcare front, there was a discussion for cheaper medication and expansion of the pharmaceutical benefit scheme, but this does not appear to relate to our star stocks in the healthcare sector, such as CSL, ResMed, and Cochlear.
And turning to property, there was a proposal to encourage housing and infrastructure spending, along with training for home builders, but this relates to residential housing and should not impact our existing REITs like Arena, BWP, and Waypoint, which of course are exposed to the childcare, industrial, and service station areas of property.
Mm.
The government is also providing support, Ken, for Australia's mining industry, specifically those who are involved in the transition to net zero emissions. For example, the government has highlighted that companies producing critical minerals that are used for renewable energy production could benefit from a 10% production offset. However, the list of minerals have not yet been formalized, and such measures are only due to begin from 2027 onwards. So, therefore, we do not anticipate a material change to our mining stocks that are leveraged to this movement, such as mineral resources.
Yeah, certainly keeping a close eye on that one, Dan. And with the budget proposing a significant decline in the number of student migration to 260,000 by 2025, that's about half the number from a year ago. This will obviously affect our borderline star growth stock like IDP Education, although much of this news appears to have been already factored into the share price as highlighted earlier, Dan. Well, that's all we have time for today. Appreciate your insights.
Thanks, Ken. It goes to show there's never a dull moment in markets with plenty packed in to this episode. And of course, if you do have any further questions, feel free to come along to our Lincoln Live webinar on Monday. Of course, it will be joined by yourself, Kien Trinh, Head of Research, Robbie, our Head of Customer User Experience, and Maddie Swartz, our Senior Portfolio Manager for the Lincoln Funds, and I'll be stepping in for Tim Lincoln as he'll be away on Monday. So if you have any questions on the resources, definitely tune in.
Yeah, looking forward to answering our clients' questions on Monday. But we recently launched our concierge service to manage the administration burden of setting up your stocks within the portfolio manager. Here, you also have a dedicated training manager as well to enable you to concentrate on what really matters, and that's the risk management and stock selection of your portfolio. So sign up for that if you're interested. Now, from our team at Stock Doctor, take care and have a happy, healthy, and prosperous week ahead.